Prop firms have recently been a subject of controversy in the trading industry. We see prop firms manipulating spreads to breach accounts, reject payouts, and do sketchy things behind the scenes that they have been doing behind closed doors until now. My Forex Funds has recently gotten a letter from the CFTC, and we finally got to see what some of these prop firms have been doing in private. The CEO of My Forex Funds was noted buying Lamborghinis, Bugattis, and expensive luxury homes from the profits of the firm. A total of $300 million was to have been made, and around $137 million was paid out, leaving them with a profit of $173 million. This fraud wasn't anything normal though. It was something traders had been experiencing for years without answers. Since My Forex Funds loses money when customers make money, they had implemented algorithms to make sure profitable traders and algorithms are being outsmarted. On June 6, 2022, an employee we'll call Employee A had this conversation. I suspended one of these traders for arbitrage and requested he send the source code of the Expert Advisor, which is an automated trading program, to unsuspend the account. I really need to know what they're doing so I can either ban them or STP them. He's got like $100,000 worth of pending to withdraw. So I need something to stop that money going out. Disgusting. A profitable trader was suspended and told to be sent his EA source code to see what they were doing so they could ban him and prevent him from getting his $100,000 payout, which they needed to stop from being paid out because that's cutting into their profits. A month later, on July 15, 2022, Employee A was also complaining to the advisor that he was not doing enough to find and eliminate profitable traders. I'm pretty upset how we have so many accounts continuously trading and making huge amounts of money. We have record losses, but we're not picking out those accounts that don't lose. Record losses equals record profits for MFF. But when the firm is used how it's intended to let the small guy have capital to trade with, for the retailer to make money, they have to look for reasons to eliminate them so they don't cut into profits for MFF. Employee A was also caught communicating with the advisor to show how they use delay and slippage to limit customer profits. Delay and slippage are applied automatically to customer accounts through the use of profiles to which the customers are assigned. On April 15, 2022, Employee A identified a number of accounts using a bot, which is an automated trading program, to successfully generate profits. Employee A wrote to the advisor, "I think we need another profile just for these accounts and just slip them to hell," to which the advisor subsequently added to the requested profile. Slipping to hell a profitable trader, whether they were using a bot or not, is wrong. If a trader is profitable, all firms' goals should be to honor what they market, a payout and a fair chance to use larger capital to trade with. Slippage caused on purpose to issue delays and limit customer profits to line their own pockets is disgusting. The CFTC alleged that MFF minimizes the likelihood that customers trade profitably by using pretext to terminate customer accounts, misleadingly assessing commission that reduce customer account equity, and secretly use specialized software to cause customer orders to be executed at a worse price than appeared to the customer at the time the order was sent, handicapping the extremely small number of successful customers to decrease customer profits and increase customer loss. MFF had over 135,000 customers since November 2021, which paid around $310 million in fees, and the CEO used the proceeds to buy luxury homes, hypercars, and make tens of millions of dollars in transfers to his personal accounts. Proprietary trading firms, also known as prop firms, have been a subject of controversy and skepticism in the trading industry. While not all prop firms can be labeled as scams, it is important for traders to exercise caution and conduct through thorough research before getting involved with them. One of the main concerns with prop firms is their business model. They often require traders to deposit a significant amount of capital upfront, promising high leverage and profit sharing opportunities. However, traders might find themselves facing strict rules, limiting trading strategies, and high fees imposed by these trading firms. Another issue is the lack of transparency and regulation in the prop firm industry. Unlike traditional brokerage firms that are regulated by financial authorities, prop firms operate under different structures and may not have the same level of oversight. This can leave traders vulnerable to potential scams and unethical practices. It's crucial for traders to carefully evaluate the reputation and track record of any prop firm they consider joining. They should research the firm's history, reviews from current and former traders, and disciplinary actions taken against the firm. Additionally, seeking advice from experienced traders or industry professionals can provide valuable insights and help avoid falling victim to potential scams. While it's true some prop firms can offer opportunities for traders to gain experience and access to trading capital, it's essential to approach them with caution and skepticism. Traders should always prioritize their own due diligence and protect themselves from potential scams or fraudulent activities. My advice if you're going to trade prop firms is to trade regulated firms, mainly futures firms. Forex firms have seemed to be the only ones doing all these shady things, while futures firms may be doing them as well, but they are regulated and a lot safer than Forex firms. I would give a recommendation on what firms to use, but I don't want to associate with any, as I mainly trade options with my personal funds. And with that being said, there are some good firms out there. You just have to pick and choose, look at their track record, search up their name on Twitter, see if people have been denied payouts or not, and see if they've done any unethical practices through other people's experiences. Make sure to check their reviews on Trustpilot, make sure you check their reviews in their personal Discords if they have them, and make sure you overall do your due diligence before getting into any prop firm, because the last thing you want to do is have to pay hundreds of dollars in testing fees for the evaluation account, pass it, get to a payout, just to be slipped to hell because you're going to make a dent in their profits. And with that being said, be safe, trade safe, and until next time.